Ladies and gentlemen, welcome to a new episode of the FinTech Hunting Podcast. We've got an incredible guest for you today. He's a technology evangelist. He's a valuation expert. Please help me welcome to the show, Chad Karol, SVP Nationwide Property and Appraisal Services. Chad, welcome.
I appreciate it, Michael. Happy to be here.
Well, it is great to have you. You have a wealth of knowledge and expertise. So why don't we start there for our listeners who maybe don't know you or haven't had the great opportunity to meet you yet? Tell us a little bit about your background and how did you get into the mortgage space and valuation area?
Yeah, so I've been in the alternative valuation space for 16 years, I think. I started in 2006, specifically in the alternative valuation industry, and I led a very large volume group through from 2006 all the way up to a few months ago when I joined Nationwide, and I've overseen probably close to 2 million transactions,
Wow.
alternative valuation transactions, mostly desktop appraisals, but then a few AVMs and other type of inspection products mixed in there too, but mostly desktop appraisals. So definitely have a lot of experience there.
Fantastic. So let's dive into that. What are some of the biggest challenges you're seeing in the industry, especially as it relates to valuations, property appraisals? I mean, I know it's an aging population of appraisers. I know there seems to be a shortage of appraisers, but I'd love to get your insight and expertise into that.
Yeah, and we saw a couple of years ago, right, when the industry was just going crazy, the really hot market. There was definitely a lot of issues with capacity and volume when it came to appraisers throughout the entire nation. Now, there were some areas that were a little hotter than others, but really we had that capacity issue throughout the entire nation. And one of the great things about desktop appraisals is it really helps the appraisal industry because appraisers can complete more alternative valuations than they could traditional 1004 appraisals. Us bifurcating that process, so having a data collector go out to the property instead of an appraiser, allows the appraiser to do what they do best, and that's sit at their desk and do the analysis and do the valuation on the subject property. And the more reports the appraisers can complete, obviously that significantly helps with those capacity issues, especially that we saw a couple years ago. I know things are a little bit slower now, but they're definitely going to pick up here pretty soon. And I think the more alternative valuations we get appraisers to do, more we get lenders to order, that's definitely going to help the industry.
Excellent. So let's talk about alternative valuation models. There's some lenders that are kind of hesitant or still, no, I need a full appraisal. Talk to me first about what are some alternative appraisal models, and then why are some lenders still kind of hesitant or on the fence of whether they should use them in a consistent manner?
I think, lenders have just gotten accustomed to always just ordering a 1004 or a 2055, and that's that. But what we've seen over the last decade or two is a lot of lending institutions getting ahead of their competition by utilizing desktop appraisals specifically, but also AVM products that include an inspection, et cetera. But there really is a huge amount of upside to using alternative valuation products, specifically, like for example, our Pinnacle Desktop Appraisal Report, where you can replace a 1004, you get much quicker turnaround time than a traditional appraisal, definitely lower costs, and again, it just helps the lenders get through that process much quicker than a traditional appraisal.
So let's talk a little bit and let's dive a little bit deeper. You guys have made a big announcement, just rolled out a press release. You have your Pinnacle service that you touched upon a little bit. Go into more detail and explain kind of why you guys entered the market and specifically the value that you're bringing for lenders with this new offering and the expertise that you guys bring.
Yeah, and so we did just launch our Pinnacle Desktop Appraisal products, and it's going really well. Really, it's a bifurcated process where we send out a data collector to the property instead of the appraiser. And we find that sending out a data collector instead of the appraiser, again, lower cost and quicker turnaround times. And we send out real estate professionals to the properties. They're very well trained in what they're supposed to be doing. There's other AMCs out there that maybe send pizza delivery guys and Uber drivers, etc. That's not what our model is. We send out real estate professionals. And then once that data collection's done, it goes back to our appraiser, and then our appraiser completes the valuation on the property. And again, the appraisers that we are engaging are all local appraisers to the subject property. I know there's models out there that use sort of centralized appraisers where they're doing an appraisal throughout the entire state or even states. That's not our model. We utilize appraisers that are completing traditional appraisals in that same market area. So you get that expertise. You get super high quality, not only because the appraisers obviously understand the market area, but each Pinnacle desktop appraisal that we complete goes through 2 quality control checks. We'll QC that data collection report that the real estate professional completed, ensure that it has all factual data before sending it over to the appraiser. And then we'll do another QC check once the appraiser completes the report. Similar to a traditional appraisal, we'll review it, ensure that it meets all our quality standards, again, just like a traditional appraisal.
Well, I love how you guys have rolled this out from the perspective of you're still using local appraisers who know the market, who know that specific area of the country, of the state, whatever it may be. They have that local expertise, but you're using this alternative valuation model so that you can leverage their expertise and time, provide a more cost-effective solution, and really be able to do more appraisals in a timely manner. And that's one of the hiccups that a lot of people are dealing with. And especially during COVID, when volumes were through the roof, people really struggled with getting those appraisals done in a timely manner. And the pain it causes when you hold up a closing.
Yep.
No lender wants to make that call to the borrower and say, hey, I know you had the moving truck ready. I know your family was all set to move in on Friday, but we weren't able to get the appraisal completed, and it's going to have to move back a week or two.
Yeah. Yeah, there's nothing worse than that. That's what we don't want to be in. So yeah, the more alternative valuations we can get into the marketplace, the less risk of that same thing happening once the market gets hot again, which again is going to be sometime soon, and it's going to happen.
Exactly. And I think the other thing that it also does is as you look at what's taking place for the lenders, the cost to originate is continuing to rise. Whatever study you look at, most people are saying it's about $13,000 a loan, which is just crazy.
Hmm.
A lot of that is the cost for individuals to perform the work. And if you can provide an alternative valuation model that has the checks and balances and that the investors are going to accept, and you can do it in a more cost effective manner, isn't that a win-win-win all the way around?
Yeah, and especially nowadays with inflation going crazy, you would think that everything's still increasing in price, but we can lower the cost of these appraisals. And the really great thing too is that while you may think that you're lowering the cost of appraisals, you're paying appraisers less. That's really not the case. Per hour, appraisers can make more money completing alternative valuations, sitting at their desk instead of going out to inspect a property. Appraisers are actually making more money doing these alternative valuations than they are doing 1004s all day long.
I love it because they can get through more volume. They're not going out to the one property. I can only get 3 or 4 or 5 properties or 8 properties done in a day. I can sit at my desk and with alternative appraisal models and the technology and the checks and balance, they can get through more volume. And then, like you said, they can earn more money. Um,
Exactly. It's a win-win situation for everyone.
I absolutely love it. What do you think are some of the hurdles for lenders still not adopting these models?
I think they just need to get together with us really and talk through what they want to do and want to see. I think we could talk through all the advantages of completing these type of appraisals for home equity loans, for fix and flip loans, for REO properties, et cetera. There's a lot of uses for them. And I think we just need to get together and talk through those uses. Our Chief Innovation Officer, Mike Kirk, has a lot of experience not only in the AMC world, but he was chief appraiser at a very large regional bank. He can talk through all the regulatory challenges, et cetera, that perhaps lenders are a little bit afraid of. But we certainly have the expertise on our team to talk through those challenges.
Well, and I think you bring up an excellent point of why not take a look now? Okay, volumes are a little bit slower. We know they're going to pick up. I don't have a crystal ball. You don't have a crystal ball. It could be a month. It could be 3 months, but we've been in the mortgage industry long enough that we know it's a cyclical cycle. Eventually, rates are going to start coming down. There's going to be a little bit more inventory. Volumes are going to pick up. So now is a great time to take a look at some of the different options out there. And if lenders are really focused on how do we lower the cost to originate and still deliver a great experience, this is one way where they can look at alternative appraisal models, get the same quality, but be able to do more volume at a lower cost, which you mentioned is a win-win for everybody. If somebody wants to find out more about all the great stuff that you guys are doing, the alternative models, and just having a candid discussion with them and kind of walking through how you guys do it, how it could benefit them, what's the best way to get a hold of you and the team?
Yeah, they can do a couple things. They can come to our website. And there's a lot of information about our alternative valuation products on our website, and that's nationwideamc.com. Or they can reach out to me directly, shoot me an email. I'll get back to you right away. And my email is ckarol@nationwideamc.com. That's the easiest way to get
Outstanding.
hold of
Chad, you're a wealth of knowledge. I know we don't have crystal balls, but kind of where do you see the industry going, especially from an evaluation perspective? Do you see more lenders adopting and embracing this type of alternative model? And kind of what's next on the horizon?
Yeah, I definitely see many more lenders coming to these alternative valuation products, really specifically because Fannie and Freddie are finally on board. And so they've got their own desktop appraisal products that they've rolled out very recently. They'll have hybrid appraisals. Fannie is coming out of the pilot of the hybrid appraisal product. So I think as lenders see that Fannie and Freddie are on board too, I think that's going to bring in a lot more clients to look at those products, but along with the home equity, products like the Pinnacle Desktop Appraisal.
Oh, I love it. Chad, you are a wealth of knowledge and expertise. You're welcome back to the show anytime. Thank you so much for being a guest on this episode of the FinTech Hunting Podcast.
Thanks for having me, Michael. Appreciate it.